Good morning. We are now live. You are now tuned in to another edition of Pre-Market PulseScan with yours truly, Dex, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com. Want to say what's up to the people already in the chat. Yes, we are live, folks. Trading room is up and popping early in the morning. Want to say what's up to John and Mick in the chat. Yeah, we're gonna get down, man. We got a lot to cover today. It's a lot going on. It is a bloodbath on Wall Street. Futures right now are pointing to a Black Monday. We even have two-bar Charlie setups going on. And then we got a little special something for our premium trading room members. The only way that you can become one is to go to PulseWaveTrading.com. Start off with that free account, see all the goodies and discounts and coupons we got for you there, and then take that next step. Get yourself a six-pack. You know you're thirsty. Get one for a friend. It's not a big deal. We got programs starting as low as $69 a month. That's right. You can get started with trading the premium PulseWave price trigger reports on a daily for as low as $69 a month. What you waiting for? Let's see what you missed so far, folks. It is a lot going on. What up, Nathan? What up, Kyle? All right, so let's get right into the news, because there's a lot of news to cover too. May have to do an extended or extended live or something. I just know it's shaping up to be a very busy day. All right, so first and foremost, global stocks tank as investors brace for a coronavirus pandemic. They're saying pandemic. The flu-like illness has now claimed lives in Iran, Italy, and South Korea. What up, Martin? All right, Warren Buffett is cheering the current sell-off, saying investors should want the stock market to go down. That's good for us, actually. We're a net buyer of stocks over time, he says. The billionaire investor in Berkshire Hathaway CEO said in the NBC interview on Monday. Okay, so let me tell you this, man. Of course he's going to say that, because remember the old Wall Street mantra, buy low, sell high, blah, blah, blah. And that's really not the entirety of it. That's just what they programmed the retail traders to mimic. But the truth of the matter is, buy low, sell high. Sell high, buy back lower. Sell lower, buy back even lower. Buy higher, and then sell back even higher than that. That's the fullness of it, but you never get a chance to learn that because they don't tell you that. All right, so moving on here. Now, with Buffett, he likes a market to pull back like this or sell off, because then he can go around and find these desperate companies, because that's what he does. He looks for desperate companies that he can come in and almost take over in a sense. He'll get bailout deals done for these companies at pennies on the dollar for him. That's not something readily available to the general public. All right, so don't go thinking you can be Warren Buffett and just sit there and wait for a company's stock to sell off, precipitously, and then think you're gonna go in there and do what Warren Buffett does. Even if you have a lot of money, you still aren't going to be able to do what Warren Buffett does. There is not another Warren Buffett. He is a anomaly when it comes to situations like that. There's really no competition for him doing what he does. No one really has, what he has, and has been doing this as long as he's been doing it. So just off the strength of his name alone, a company would love to have him involved, even if it may mean that they lose control of the company down the line somewhere. They don't care, because they're going to walk away with a golden parachute. If you're an owner, you're going to get one. This is how he does business. So that's kind of like a misleading article, making you think that, hey, yeah, that's right, he's right. When things sell off, I can get back in. No, you don't understand. If you miss the entirety of the father of all bull markets, don't think just because the market has sold off that it's going to rev up and start going again. No, when these anomalies occur, if you don't take advantage of them when they come, they're not coming back around again. All right, at least not in your lifetime. And that's something that people need to understand. There is a sense of urgency in situations like this. When the market is doing, it's trending, you have to trade the trend. Trend followers make the most profits over time, more than any other form of investing, more than value investing. I know people don't like to hear that, but it's the truth. More than any other type of investing, the trend followers always come out on top in the end. They're the last man standing when the music stops. And that's where you're going to want to be if you intend to be in this for any length of time. All right, moving on. Here are the takeaways from Warren Buffett's annual letter. The Berkshire Hathaway CEO discussed accounting rules, stock buybacks, board of directors, acquisitions, succession plans, and market performance. U.S. sees no material impact from virus on U.S.-China trade deal for now. Treasury Secretary Steven Mnuchin told Reuters he does not expect the coronavirus outbreak to have a material impact on the first phase of the two nations trade deal, although he warned that could change as more data becomes available in coming weeks. That doesn't really tell you a whole lot. Goldman Sachs pleads not guilty in Malaysia over an MDB bond sale. 3 units of the banking titan pleaded not guilty to charges of misleading investors regarding a $6.5 billion in bond sales that Goldman helped raise for State Fund Malaysia Development Berhad. Let's see. Burnham States News Agency reported on Monday. Okay, real quick. For those of you who are not in the know, there is a book. There are actually several books with this title in it. There's a book called Fiasco, okay, and it's talking about how the big Wall Street brokerages and banks, how they create securities, and when it comes to creating securities for foreign countries, these securities are designed to blow up. And what that means is not in a good way, but in a bad way. The securities are designed to blow up in the person's face. All right. This is old hat. You would think, though, that after decades of banking laws and just changes in global economic situations, that this will be a thing of the past. But this particular news report is showing you that this practice is still going on. Goldman is still writing these securities that are designed to blow up in the customer's face, and they're doing it pretty much with impunity. Now, let me explain to you how they go about doing this. What they do is not only do they write these securities to blow up in your face, and then they charge you an arm and a leg for partaking in your own demise, but they set aside a portion of funds for litigation. And they already know that they're going to have to pay a litigation cost. That's why if you think about all the litigation you've ever heard coming out against Morgan Stanley, Goldman Sachs, all these other big, triple OG firms on Wall Street, you will find out that it's never bankrupt them. They've never struggled financially because they've set aside the money because they already know that the lawsuits are coming. So they're well insulated from that. All right. That's just how they do. They've learned to perfect the strategy over many decades of doing it. And this article just shows you that they haven't stopped. There's also was that book, The Confessions of an Economic Hitman. All right, that's telling you that in the 2000s, what happened was they perfected it and they learned how to go about doing it in an even more dastardly way. So not only do they still underwrite securities that blow up in customers' faces, but they also know how to cover their tracks now in doing it. And even if they do get found out, they have enough money set aside for the litigation to cover those costs. So it doesn't matter if they get hit for $1 billion fine, they have enough money to cover it. Now, let me explain to you how the government is complicit in these situations. You see, the government knows of their operation. They know what they're doing. So the fines make it sound to the public more palatable. Yes, your government has stood up and we have protected you. We have punished these firms and they will never do this again. A, you're right. They will never do it again because it's a one-time deal. And B, the company was not punished. What these fines equate to is a tax, or we can say a fee for being allowed to operate and do what they did in the first place. So believe it or not, there are people in back rooms that are getting broke off as a result of these deals, and the regulatory agencies are complicit in it. All right, that's why they get paid. You know, they'll say, "All right, give me $1 billion off of what you made." That's gonna, and we'll call it a punishment. We'll call it a fine. You know, but at the end of the day, no one's going to prison. Now, see, if you or I committed such fraudulent activities like that, we'll be thrown in prison. All right, no one goes to prison when these big triple OG vanilla firms engage in such financial terrorism. No one goes to prison. All right. Just want to throw that out there for you. All right. So, Primark owner warns coronavirus threatens clothing supplies. Associated British Foods said there was a risk of supply shortages on some lines later this financial year if delays in factory production in China are prolonged due to coronavirus. So you're starting to see now different sectors of the economy starting to be affected by this the longer this goes on. PepsiCo buys Chinese snack brand B and Cherry for $705 million. B and Cherry adds direct to consumer capability, positioning us to capitalize on continued growth in e-commerce and a local brand that is able to stretch across a broad portfolio of products through both online and offline channels, a PepsiCo executive said. See, this situation is allowing U.S. companies to come in and start, snatching up Chinese companies. You see where all this is going? All right, this is not a coincidence. Stocks are tanking. European equities drop with Germany's DAX down 3 to 4%. Britain's FTSE 100 down 3%. Italy's FTSE MIB down 4 to 5%, and the Euro Stoxx 50 down 3 to 4%. Asian indexes closed lower with Chinese Shanghai Composite down 0.3%, Hong Kong's Hang Seng down 1.8%, and South Korea's Kospi down 3 to 7%. Good grief. U.S. stocks are poised to open lower. Futures underlying the Dow Jones Industrial Average and S&P 500 were down 2.4%, while NASDAQ futures slid 2.6%. Some big earnings are coming out. HP, Intuit, Palo Alto Networks are among the highlights. There's some key data on the docket. Look out for national activity and manufacturing figures. Wow. Wow, wow, wow. All right, someone has just posted this. A Corona patent from years back, and there's the patent number if anyone wants to take a look into that. There it is right there for you. I'll leave that there for you for a few moments. Wow, wow, and wow. I mean, that's all I can say. It's just wow. Wow, wow, and wow. There's just the news is overwhelming. But now let's take a look at some charts, folks. You got to see what's going on in the pre-market. It is not a pretty picture. I'm going to break it down for you, though. All right. So, first and foremost, right now the Dow is at the lows of the session, down 904 points at 28,079. The NASDAQ 100 is down a whopping 323 points at 9136. The E-mini S&P 500 is down 100 points and a quarter at 3238 and 3/4. The Russell is down 52.1 points at 1627 even. Bitcoin is up $65 at $9,775. Nat gas is down 4 at 1.85, so $1.85. Crude oil is off $2.50 a barrel at $50.87. The long bond is now up 2 points and 2/30 at 167.01. That used to be like a limit move back in the day. Gold futures are exploding, folks, up $34.70. It's $1,683.30 an ounce. Silver is only up 21 cents at $18.74 an ounce. The US dollar index is at 99.47, up 20 pips. The euro is off 31 pips at 108.41. Pound sterling is off 53 pips at 129.28. Aussie is off 30 pips at 66.04. Beans are down a whopping 12.25 points at 8.78 and a quarter a bushel. Corn down 3 and a quarter at 3.73 and 3/4 a bushel. Take a look at these numbers. We're looking at 2-bar Charlies today, possible 2-bar Charlies. And I have to tell you, it's not too many of them, even though you would think that there would be a whopping amount of them. But right now we have nat gas has a bearish 2-bar Charlie. We're looking for it to close negative today and be down all day. That's nat gas. Crude oil has a bearish 2-bar Charlie. We expect prices to remain low throughout the session and close low on the day. So all day down day for nat gas and crude oil with the bearish 2-bar Charlies. And I think that's all. No, yeah, that's all we got. I thought we had one more. No, we do have one more. Another bearish 2-bar Charlie in corn futures. Bearish 2-bar Charlie. So we got 3. We got nat gas, crude oil, and corn. All 3 have bearish 2-bar Charlies for today, which means we expect an all-day down day in those markets. I have to say, folks, well, food. All right, someone has another question. All right, I'm going to take away the Corona patent now. You guys had time to get that. Let's put this up here. This is a good question. Question is, why is food down? They're thinking not so many people around to eat it. That's not a bad point. But no, the reason why commodities like are down, like the beans and the corn, is because the US dollar index is so strong. It's flirting with hitting par. Par is 100 for those that don't know. And right now we're at 99 something in the dollar index. So 99.44 to be exact. We did hit 99.63. So this thing is live and in full effect. The stronger the dollar, the weaker the commodities. Now, I know you're going to say, but isn't gold and silver a commodity? Of course. But gold and silver isn't trading like commodities today. They're trading like currencies today. And that is a big deal. Okay? Trading like commodities, which you would expect for them to do. All right? So, where do we go from here? Well, you got to look at what saith the PulseWaves, because subscribers got their reports on Sunday. warning of such things. So they knew how to position themselves ahead of the market. All right. And that's the power of the PulseWave report. It's telling you in advance what you can do to capture these moves that are coming your way. It takes a lot of the guesswork out. You don't have to, like, oh no, what am I going to do? What should I be looking out for? What should I be trading? Should I be trading at all? Just all those questions that come up. What kind of a market are we in? How high are we going to go in this market? How low are we going to go in that market? Just all those things, questions that you have about any given security. That's where the pulse waves come in. They take all the guesswork out to tell you what you can expect, and then they lead you by the hand in the right direction. And that's my life's work. That's what it does. That's what it do. So with that being said, let's take a look at these charts now so you can see what's happening as the Dow is getting close to being down 1,000 points. Now, for those in the trading room, if you didn't take a look at the alert that was posted last night, because I'm not a greedy man, I went ahead and took profit on my NASDAQ 100 future shorts, and I bagged me a full 200 points. Okay. Now, had I known that it was going to fall lower, I probably would have went ahead and gone to it. But a brother had to get some sleep at some point, so I went ahead and I tightened up my stop, and I went ahead and let the market do what it was going to do. So sometimes you have to do that. You have to get some sleep at some point, and the only way to do that is to step out the way, move your stops, lock in some profit, and then keep it moving. And that's what I did. All right, so now let's take a look at the at these marks. See what kind of rally alerts and stuff we got going on. And then I'll be able to answer some of your questions like the one I just posted there, wanting to know what about the miners. We're going to take a look at that as well. All right. So here we go. Let's pull this up. All right. So the miners is the first one that came up. So let's go with it. All right. So as you can see, this is a chart of the miners. This is what happened on Friday, GDXJ. All right. So really strong coming off of this rally alert from back here. Nice, strong upward thrust, upward momentum, which is what you like to see. And the market hasn't looked back. Now, because of what's happening in the markets this morning, it's a possibility that the stock could pull back. But because it's not only an equity, but it's an equity that is following and tracking what's happening with gold prices could backstop this market. Okay. So they could continue to explode along with gold. So I would not say that that's out of the question. As far as pre-market goes on the GDXJ, oh, the opening bells here. Okay, so GDXJ just gapped up $1.44 on the open. So that's to answer your question right there. We're up $1.44 on the GDXJ. All right, so that's what it did this morning. So it's doing good, and we didn't have any new alerts, either rally or crash to speak of on that one. So GDXJ is looking strong this morning, along with gold and silver, which we might expect. All right, so financial sector, as you can see, we warned of a crash alert for Monday, and this is what's up. Okay, this is what's going on. I expect this market to continue to pull back with the equity market today. I think stocks across the board are going to get hit. I think all the sectors pretty much are going to be down. And this is a secondary crash alert that we have for the XLF Spider ETF. On as far as the bonds are concerned, you already know they exploded in the pre-market. This is what they're already doing. So we still have this gap we haven't dealt with right here, folks. And we got one right here too. and we got one back here that has not been dealt with in the bonds. And then we got the one back here and the one back here. So who knows at this point, right? And we got the bullish pointer. So the market's doing exactly what we expected it to do, really. There was no new alert for bonds coming in today as far as rally or crash alert. And you see that on the chart. All right, so let's see, the next one here was crude oil. We did have a crash alert coming into the market for today, for Sunday night into Monday, and that crash alert is already playing out. We went over that during our pre-market segment. And I'm just showing you the chart so you can see what's there. All right, the NASDAQ 100, as you can see, we had a primary crash alert on Thursday, got another crash alert on Friday for Sunday night into Monday morning. And today's Monday morning. We already did the pre-market segment, and you already see what's going on there. So if you are short the QQQ or short or long the inverse ETF for the NASDAQ 100, you're going to want to go ahead and move those stops, tighten those stops, and lock in as much profit as you can. Don't be afraid of the market coming up and taking you out. Don't be greedy. All right. Manage the trade. Don't turn a big profitable trade into a loser. That's not how we do. That's not what we do. All right. Take this gift, this present, and do what it's going to do. Right now, the trend line support is in play on the NASDAQ 100, and that trend line is going to put us around 9,058. So we still have a little ways to go. And I will have some information for the trading room a little later today. I'm going to open up the Pandora's little black box and see what we got going on with the algos intraday. All right. This is Litecoin. Had a rally alert coming into Sunday and Monday. So hopefully we should have gotten a bounce there, or we'll continue to. All right. Next one here is Ethereum. All right. So Ethereum also had a rally alert, primary rally alert. So we're looking for that to continue to do that into the weekend, into Monday, as the market gets back up here toward resistance around the 275, 280 level. And that's Ethereum. All right. Looking here at Dash, pretty much the same thing. Had a rally alert, looking for the market to head back up here toward resistance around the 120 area. All right, so somewhere there about. So if you're long it, go ahead and make sure you tighten up your stops, because it could reverse here intraday. You just never know. All right, next one here is Bitcoin. All right, Bitcoin also had a rally alert. Don't know how much energy we're going to get on these technical bounces off the trend line supports. So you're going to really have to watch and make sure your stops are in. So if it does reverse and fall down, it doesn't take you with it. All right. Try to milk as much profit as you can on these technical bounces back up. But this is a primary rally alert, so we could come all the way back up toward resistance. So just watch it. All right. And then here's the Dow futures. We already know what's going on because we did the pre-market segment. But coming into today, the system was still short. As you can see, you're in a downtrend channel, beginning stages of a bearish weekly trend momentum. We didn't have a rally or crash alert, but it's just a continuation to the downside. And you're seeing that as the market is quickly heading toward the trend line support of 28,696. So it's dropping below that and threatening to come down here toward the Kumo cloud. Let me just pause and say, this is what I'm thinking. I'm thinking that after today's sell-off, we get a huge Tuesday turnaround. All right, like a huge one, because I think we're going to end with probably a spike, and then the market's just going to just shoot right back up. All right, that's just me. That's just what I'm thinking, because we haven't technically really topped out. But based on what happens today and the technical damage on the chart, we'll see. But that's just my kind of feeling on it, okay? All right, silver. As we know, silver and gold are up. They were up in the pre-market. But looking at the chart here, you can see there was no new rally alert other than the secondary one that we're coming off from 3 trading sessions ago. System's just been holding the long. So the market's doing what we expected to do. It's trying to close above this previous high back here, and that was 1850. A strong close above 1850 is a good thing and will set the stage for further rallying for the rest of the week in silver. Taking a look here at gold, pretty much the same as the silver scenario. Strong bars coming off of this secondary rally alert back here a few days ago. So I'm expecting continuation here as that we're getting liftoff. See now the trend line support is starting to pull away from the Kumo cloud here, which is exactly what you want to see in this scenario. So markets are doing exactly what we anticipated that they would do. And that's what you want to see in situations like this. All right. So that is my analysis. Those are the rally and crash alerts that we had, coming into today. And already we're getting a technical bounce in the markets, just as we anticipated. I think the lows are in for the day. I think the range has already been set. And if anything, the market should start to find a support zone from which to bounce back from. That would be my take on it. And I would not be surprised to see the market do so. All right, I'm going to be posting some stuff, Lord willing, here in the trading room here shortly, as far as what the intraday algo perspective is starting to look like. And then I'll let you know my findings. All right. So with that being said, remember, PulseWaveTrading.com. You're going to want to go and take advantage of the coupons that we have right now, steep discounts. You can get yourself a 6-pack in the cryptos for $69 a month. That's right. You can get started trading these powerful pulse waves and put the power of the algorithms on your side. Know when and where to get in and out of the markets, long and short, and prove it to yourself just how powerful this system really is and how you can design that secondary income stream for yourself. And that's only at PulseWaveTrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. I'll see y'all back here this evening with the end of day report. And the rest of you, I will see in the trading room. Peace.